the heck is going on? Man, when it rains, it pours for Cciv and Lucid Motors. Just when I said that in my last video, there are no major news catalysts coming from Lucid Motors, I find this Federal Securities Class Action lawsuit case document. I just got done doing a video that Cciv and Lucid Motors are being reviewed by the SEC, and now they're being sued. Yes, Churchill Capital and Lucid Motors are being sued. In this video, I will provide you a high overview of the lawsuit and let you decide yourself if Cciv and Lucid Motors are guilty or innocent. So you might want to stick around for this. Swadee that's hello in Thai. My name is Anthony and welcome to Quantum Finance. If you find the video content of value, please help us grow this channel by liking and sharing the video. If you have not subscribed, please do so, and while you're at it, please hit the alert bell button below so that you can get my latest video upload. Also, if you want to get 2 free stocks for up to $1,850 each, be sure to use my link below in the description to open an account and deposit $100. Some of our viewers have received Tesla and Google stocks. Please note that this video is for pure entertainment and educational purpose only. I am not a licensed financial advisor. I am disclosing that I'm long on Cciv, and no, I'm not being paid by Cciv, although it would be nice to be paid by Cciv to talk about their stock. With that out of the way, let's get right into it. If you have been a follower of Quantum Finance channel, you know I have been long on Cciv and Lucid Motors. After the merger, however, I created a video stating that Cciv and Lucid Motors have screwed the retail investors when the detail of the merger was finally revealed, and we learned that there are a lot of misinformation that have created a lot of confusions, ranging from dilution to the number of EVs sold and its delivery being postponed. In my recent video, I stated that Cciv and Lucid Motors are being reviewed by the SEC, and now they're being sued. All of these activities were due to the fact that Michael Klein of Cciv and Peter Rawlinson of Lucid Motors knew something but didn't necessarily were being forthright about the information presented. I'm also certain that the cumulative of all of the misinformation or lack of have created mistrust and now seems to have opened a floodgate of potential litigation heading towards Cciv and Lucid Motors. This Federal Securities Class Action lawsuit case was filed on April 18, 2021 under the Northern District of Alabama Eastern Division. I have enclosed a link of the case document below in the description if you want to read it in detail. I will provide a high-level summary as I do not want to read word by word and line by line, as this could be a 30-minute long video. So let's get started. The plaintiff is Randy Phillip, an individual based out of Birmingham, Alabama, against the defendants, which is Michael Klein and J. Faragin of Churchill Capital IV and Peter Rawlinson of Atievia Inc, doing business as Lucid Motors. This class action lawsuit is on behalf of a class consisting of all persons and entities that purchased Cciv securities during the class period as defined between January 11, 2021 and February 22, 2021. For more information, you can contact the attorneys at Winston Cooks, LLC in Birmingham, Alabama. I'm pretty sure that the attorneys at Winston Cooks have thoroughly performed their due diligence and have substantial evidence to support their case. Otherwise, they would not be stupid enough to file a frivolous lawsuit, as they could lose their license to practice law. The lawsuit is considered class action because of the common question of law and fact exists as to all members of the class, which are A. Whether defendants violate federal security laws based upon the facts alleged herein. B. Whether statements made by defendants to the investing public during the class period misrepresented material facts about the business, operations, and management. C. Whether individual defendants caused Cciv and Lucid to issue false and misleading statements during the class period. D. Whether defendants acted knowingly or recklessly in issuing false and misleading statements. E. Whether the price of Cciv common stock and warrants during the class period were artificially inflated because of defendants' conducts complained of herein. And F. Whether the members of the class have sustained damages and if so, the proper measures of damages. There are 2 key counts that are being challenged. Note that the plaintiff is seeking for compensation and punitive damages. Count 1. During the class period, the defendant Cciv, Atievia Inc, Lucid Motors, Michael Klein, J. Faragin, and Peter Rawlinson have disseminated and approved of false statements such as forward-looking statements to inflate Cciv share price, which they knew or deliberately disregarded were misleading in that they contain misrepresentations and failed to disclose material facts necessary to make the statement made not misleading. The case claimed that the defendants violate Section 10B of the Exchange Act and rule in that they 1. Employed devices, scheme, and artifices to defraud. 2. Made untrue statements of material fact and or omitted the state material facts necessary to make the statements not misleading. And 3, engage in acts, practices, and a course of business which operates as a fraud and deceit upon investors who purchase Cciv securities during the class period. This has caused harm and damage to retail investors as they rely on the integrity of the market, in particular the faith given to Cciv and Lucid to be professional in presenting real facts to retail investors, and had paid for artificially inflated price for Cciv shares. None of the retail investors would have purchased Cciv if they had made aware of the defendants' misleading statements. Count 2. The individual defendants acted as controlling person of the company within the meaning of Section 20A of the Exchange Act as alleged herein. By virtue of the high-level position at the company, such as chairman, CEO, director, CTO, and CFO, the individual defendants had the power and authority to cause or prevent the company from engaging in a wrongful conduct complaint in a lawsuit. As insider of Cciv and Lucid, they were provided with and or had unlimited access to the company's document that contains statements that are known to be false, and have the ability to prevent the release of those false statements and to make them correct but not to be misleading. The case presented the following facts of material false and misleading statements. It outlined the key events from January 11th to February 22nd. I won't be going all of the dates, but focus on the main key dates. At the beginning, on January 8th, basically established a baseline that the stock was trading at $10.03 a share. On January 11, 2021, this is when the Bloomberg news initially came out stating that electric vehicle maker Lucid Motors Inc. is in talk to go public through a merger with one of Michael Klein's special purpose acquisition companies, according to the people familiar with the matter. A transaction that could be valued up to $15 billion, the people said, asking not to be identified because the matter is private. Klein has played a prominent role in guiding the Saudis' PIF, or the Public Investment Fund, and his credential, along with the rumors, helped propel the Cciv shares to increase by as much as 40% on the following Monday. At the close of business on January 11, 2021, Cciv shares were at $13.20. On February 4th, 2021, this is when Rawlinson told Forbes magazine the following, quote, Rawlinson wants to make at least 6,000 heirs at a new plant in Casa Grande, Arizona this year, potentially generating $900 million of revenue. Volume could top 25,000 units in 2022 as versions of Air priced at $77,000 arrive. Further growth is expected with the 2023 introduction of an electric crossover tentatively named Gravity, followed by even cheaper and smaller models to compete with the Tesla top-selling Model 3, unquote. On February 16, 2021, Rawlinson then appeared on Fox Business News with Neil Cavito touting that Lucid was aiming for a spring delivery for its first vehicles. In the interview, no mention was made of any impediment to the stated delivery timeframe. At the end of the same day, Cciv stock closed at $52.70, and by Thursday, February 18th, it was at the all-time high of $58.05. Now, come on Monday of February 22nd, the long-anticipated merger agreement between Cciv and Lucid Motors was announced. Cciv and Lucid Motors' transaction equity value was estimated at $11.75 billion, and its share closed at $57.37. Now, bear in mind that the retail investors and the general public did not know the detail of the Cciv-Lucid merger deals, and that the delay of Lucid's delivery push out from end of Q2 to at least second half of 2021 was to be announced at a later time. This is a huge time change, guys. So the truth emerges as the case document continued to disclose the facts. At 6:22 p.m. the same night, Ed Ludlow of Bloomberg News reported that Lucid CEO Rawlinson announced that production of its debut car will be delayed until at least the second half of 2021, with no definite date set for actual delivery on actual vehicles. Detail of the mergers will also disclose that Lucid was projecting the production of only 557 vehicles in 2021, instead of the 6,000 it had been touting in the run-up to the merger announcement. Now, between the January 11, 2021 Bloomberg article and the official announcement of the merger on February 22, 2021, Cciv stock rocketed from $10 to $57, or a 470% gain. On February 23, 2021, following the merger and never before revealed information from Rawlinson, the stock plummeted to $35.21, or a 38% decline. As of April 18, 2021, Cciv was trading at $19.52 a share, a 66% decline from its February 22, 2021 high. Investors Place analyst Matt McCall said Cciv still remains overvalued even after a 60% plunge. Now, there were additional center allegations. The individual defendant knew and or recklessly disregarded the falsity and misleading nature of the information that they have caused to be disseminated to the investing public. The ongoing fraudulent scheme described herein could not have been perpetuated over a substantial period of time without the knowledge and complicity of the personnel at the highest level of the company, including the individual defendants. The following went on to state that the individual defendants were not motivated to materially misrepresent the true nature of the company's business, operations, financial affairs to the public and regulators in order to keep the company's share price artificially high. In summary, the information and forward-looking statement provided by Cciv and Lucid Motors were misleading and inconsistent from what was being told and what was actually being reported. The Cciv and Lucid management were the only people who knew as insiders and has the approval authority as executive officers of the company to provide such false statements, misleading and or omitted necessary information on their forward-looking statements to the public and investors. Cciv and Lucid have engaged in a scheme to deceive the market and a course of conduct that artificially inflated the company's common stock and warrant prices and operate as a fraud or deceit on the investors. The artificially inflated share price has caused the investors to have suffered from the damages. The argument is that Cciv and Lucid Motors need to be liable for their actions. So there you have it. Hopefully you find the content of this video of value. If you have not already subscribed, please do so by helping us grow this channel. You can also sign up at our Patrons to support our channel. Thank you, and let's go make lots of moolahs.